Good morning. Welcome to IG's early morning call. It's Thursday, 20th of April. Let's take a look at the headlines as we wait the start of today's European session, where we're looking potentially for little or no move on from where we were as of yesterday's close. In amongst some of the other areas of the market we're following, currencies hesitant today, but one of those I want to talk about is the New Zealand dollar, which is down on some soft inflation data that we're seeing produced across the Kiwi economy. Tesla, meanwhile, earnings out last night. Bit of a disappointment, down almost 8% in extended trade on the IG platform. We've seen the lowest gross margins there at the electric vehicle manufacturer in 2 years. And US crude trading below $80 per barrel. We're at the lowest we've seen this month. Oil prices on the way down as we see a reversal of some of the moves that we've seen in recent times. Take a look at volatility. The markets are around about the lows that we've seen over the last couple of days or so. Hadn't yet hit this 1890 level. If we do get a break of that, we're then down to levels not seen since November 2021. You'll have seen some reports recently about volatility and the fact that it is, I won't say draining out of the market, but it is a lot lighter than it was. And this is because people wanting to find areas of the market where they can get some better returns and risk assets. And risk assets have seen some of these equity markets push up, in some cases to record highs, in other cases to recent highs. But you can see in the last couple of days here in the London markets, yesterday we were on a down day. Part of that, oil companies on the way down yesterday because of that drop in the price of oil. And we've got other areas of the market where we've seen some people taking some profits recently. And now I've got a little green candle here on this market here showing us. I take a look at what's happening on the 30-minute candles, and you can see this vertical black dotted line here showing you where the close was as at the end of yesterday's session on the cash trading day yesterday. So we are up. So we've got a small handful of points in the bag, indicating potentially a slightly stronger start to the trading day. As of yesterday's close in the French markets, or as of yesterday's high point in the French markets, another all-time intraday high yesterday on the 24-hour markets. And in fact, you can see as well in the session in today's trade, we've got another green candle opening up here, not quite as high as we were intraday yesterday, but possibly looking for a slightly stronger start on the French equity markets as well. I pulled that one out over Germany because it is a new record high. In the German markets, we're holding at recent highs at 15,885. So I think a slightly stronger start to the European trading day on the session at the moment. Look at what's been happening overnight in the Asia-Pacific markets. Alibaba's grocery arm is said to be gearing up for a Hong Kong IPO. Now, that saw some positivity in some part of yesterday's trade, but broadly speaking, the pressure continues. The Hang Seng Stock Index, one of the poorer performers, not massively down into session today, but you can see that a drop of 1/7 of 1%. Outside of that, the Nikkei and the S&P 500 both ending with gains. Let's kick into what's happening on the US markets. As of yesterday's close, this is how things ended the session. Across the board on the major benchmarks down, but only by a slim margin. A slim margin on the way up for the NASDAQ Composite Index, which is where I want to start off today. The markets on the way down in the post-session yesterday, I think partially driven by what was happening at Tesla, forgive the pun. We're currently trading 30 points over the 13,000 level on the NASDAQ. So we're seeing some money taken off the table for some of the recent gains that we've seen, a 23% rise from the lows back in the 6th of January to the recent highs. So it's a question, I think, of some people, as I say, taking some money off the table as we see these markets look for a potentially weaker start to the trading day today. Now, as I said, it's very quiet in the currency markets, but I do want to pull out one area of the markets that I think it's worth us traders looking at, and that's what's happening with the Kiwi. The Kiwi dollar is, I think, in amongst the biggest movers amongst some of the bigger currencies, down against all major currencies in the session today because of what's been happening with the inflation picture. I want to pull out what's going on, first of all, against the US dollar, just to bring up a chart of this when I talk about this. We're just resting at the 200-day moving average around that area of the market. In fact, I'm going to take that off because I think it says its own thing, that it's being held up by the 200-day moving average against the US dollar. And the Kiwi as well against the Aussie dollar, down at levels not seen there since the 28th of February. The consumer price index in the New Zealand markets rising 6.7% year on year for the first 3 months of the year, slowing from the 7.2% increase in the fourth quarter It was below economist expectations in a Reuters poll for 7.1% annual rise. Look, inflation is still there. It's still big, but it's a little bit less than had been expected, which I think is why we've got this sell-off here. This is a trend going against the Australian dollar that you've got on your screens at the moment. And in fact, this line that I've got here, I'm not even now sure why I put it on there. I think it was the low point we had there back on the 6th of March. And you can see it's just escaped that in today's session. And that's taken us down there to levels not seen now since the 28th of Feb. How much more downside there is in the New Zealand dollar? Well, that's the question Daily FX strategist Manish Girardi was asking in his latest article today. You'll find it in there on IG.com. Some valuable technical analysis on the Kiwi dollar against the US dollar, the Australian dollar, and also the euro. And I think it's worth looking at what Daily FX produces in terms of some of their analysis, because they give you an insight into how to trade these markets. Let's move on, take a look at what's been happening overnight in the Chinese economy. The loan prime rate, as expected, the PBOC keeping the LPR absolutely in line with expectations. No move, 8th month in a row where we've seen static rates. The one-year loan rate was left unchanged at 3.65%, while the 5-year LPR, which is the reference of mortgages, was kept at 4.3%. Really nothing there in terms of the overall move in the markets, in terms of the currency markets for the session today. What I want to do as well is to look what's happening with the Australian dollar against the US dollar. Now, we've seen the Aussie weaken in the session today. I don't know whether or not this has got anything to do with it, but we've seen a new paper out from the Australian Central Bank, which is now wanting to get a new specialist board to manage monetary policy. The review recommended the MPB, which is the Monetary Policy Board, meet 8 times a year instead of the current 11. Now, 11 is more than most other central banks. Most central banks only go for 8. So it's in line with international practice. I don't know whether or not this has got anything to do with the markets today, but I thought perhaps I'd bring this up. We've got this rising line of support. If you're long on the Aussie against the US dollar, your stop goes underneath this rising line of support. Meanwhile, in Japan, we got some interesting data out overnight showing that import growth continued to outpace exports in the month of March. And we've got a new all-time deficit for the annual traded figures in the Japanese economy. Exports rising 4.3% in March from this time last year, logging a 25th straight month of increase. This is more than economists estimated, with a 2.6% gain. But below the 6.5% increase recorded in February, exports to China, and Japan's largest trading partner, fell 7.7%. Let's take a look at what's happening with the Japanese yen, which is slightly stronger today. You can see this move up that we've seen for the dollar against the Japanese yen recently, taking us up there to levels not seen since the 13th of March. The yen's depreciation by 16.5% from the same month a year earlier, also boosting the value of imports rather than driving up exports. Japan's fiscal year ended in March. During those 12 months, the trade deficit quadrupled to a record 21.73 trillion yen. That's about $160 billion. Just for the record, I want to show you where we were this time last year, just to show you where the currency has come from. Where are we? We're now, that's the point it was at last year. And you can see we are higher, the dollar against the yen. In other words, that depreciation I was talking about in the Japanese currency. Let's move on and take a look at German PPI data now, falling more than expected last month on month, down 2.6% in March. Economists had anticipated a 0.5% fall. This means that the PPI rose only by 7.5% year on year. Still big inflation numbers across the German economy, but this has come down after a 15.8% rise in the previous month. So this is the smallest rise in PPI since May 2021. Before I show you the euro-dollar trade, just a quick update on what's happening in the US a little bit later on today. It's Thursday, so we get the initial jobless claims at 1:30 p.m. today, along with the Philadelphia Fed Manufacturing Index. And then 90 minutes later, we get existing home sales. And at 3 o'clock this afternoon, Eurozone consumer confidence flash is forecast to rise to a negative 18.5 in April, up from a negative 19.2 in the previous month, which would be a 14-month high for this index. Before we leave all this, just want to quickly reference what's going on with the euro-dollar trade in the session of today's trade so far. We're currently trading at 109.68, so still below the 110 level, but we are sort of consolidating around these levels Where it goes next, I think, partially depends on what's going to happen with the Fed in terms of its outlook for interest rates. Got another round of interest rates coming at the beginning of next month. And the euro dollar still continues to trade below that 110 level, despite the fact we've seen this rise for the euro against that weaker US dollar in recent times. Let's catch up with some of the corporates to watch out for. I want to begin, first of all, with Rio Tinto, the company which focuses in on base metals. Better than expected 15.4% jump in iron ore shipments in the first quarter. Let's take a look at the numbers. Rio Tinto shipped 82.5 million tonnes of iron ore from the Pilbara operations in Australia in the period, to be compared with the 71.5 million tonnes in the first 3 months of 2022. Now, this beat analyst expectations for 79.8 million tonne forecast, which had been very much what had been looked for. Rio has reaffirmed its annual iron ore shipments forecast between 320 and 335 million tonnes, and unit cost estimate of $21 to $22.50 per tonne of Pilbara iron ore. I'll just show you what's going on with Rio Tinto in the Australian markets, just to show you what's been going on in the Australian market so far today. That stock down 2.44% in Australia, so potentially looking possibly for a little bit of weakness at the start of today's trade for Rio when it gets underway in the London markets. Let's move on to Smiths. The company's come out with some figures today. WH Smiths continues to benefit from many of us wanting to travel more than we have over the last few years or so. Group revenue up 41% to 859 million. Headline profit before tax and non-underlying items of 45 million. Now, this is up from 14 million this time last year. Total travel trading profit up from 10 million to 47 million. You can see how much money is now coming back into the travel sector. High street trading profit is down a touch, down by a couple of million from the 26 million we saw last year. But the global travel business, according to the company, a significant recovery in passenger numbers flying into and out of airports, going into and out of big train stations, gives strong average transaction value growth. New store pipeline, 120 stores. Strong start to the second half of the year, according to the company. Trading momentum continues ahead of the peak summer period. So let's work out what this means for the share price at the start of today's trade. I think the markets have been anticipating something along the lines of what we got this morning. In the last few days or so, a couple of weeks or so, we've seen a really big rise up from the 200 period moving average up to where we closed out yesterday's session. And in fact, from the lows we had back on the 20th of March, 18.26% rise in this move up on the percentage in terms of appreciation in the value of shares for Smiths. So my question, as ever, is this an opportunity to sell into some of the strength we've had recently? These are good numbers, but they're not blowaway numbers. I think they're just reflecting what people already knew, that many of us were, as I say, beginning to travel more, whether it be by rail or road or air, and people are wanting to get out more, and and Smiths is benefiting from all this. So it'll be interesting to see what happens. If you are long on this, stock goes in very close underneath the 1600 level. If you are long on this, because I wouldn't want to see too much of the profit that's already been seen to be lost. But on the other hand, if there is still more upside to go, you've got potentially a break of this area up here at 1622, which is the intraday high that we saw yesterday, which is the highs we had back on the 6th of March. And if you get a break of that, you've then got the next line of resistance up here at 1725, which are the highs we had back on the 17th of February. So I think, broadly speaking, good numbers. But the point to be made here is the fact that that stock has already risen considerably from recent lows. Let me stay on the charts. Just wanted to update you as well on what's happening with Renault. RNO is the ticker symbol for the French car maker. Yesterday, we escaped what was otherwise a very negative session at the beginning of the trading day, and we pretty much ended up where we started the session at 36.85. The company's come out with first quarter numbers this morning, 30% up on a rebound in sales and higher prices, boosted by the launch of several new premium models, including the electric version of the Megane, the Arcana, and the Austral. The group posting a 14.1% increase in sales over the period. First quarter revenue, 11.5 billion. We've been looking for 11.3, so I think these are good numbers. And if you're long on this, stock goes under the underside of the 3600 level, opening at 36.85. You've got some headwinds appearing just above where we are at around about the 3800 level. So a positive number, I think, coming through from Renault. But I think one of the messages to come through from this is the fact that Renault, like a lot of other car makers, are moving very fast into the electric car space. Now, this was highlighted yesterday by what was going on at Tesla. Shares falling nearly 8% in extended trade last night after the electric car maker posted its lowest quarterly gross margins in 2 years. Let's take a look at under the bonnet to see what's going on there. Top and bottom lines were marginally below expectations. Tesla posting earnings of 85 cents a share on revenues of $23.3 billion. The street estimates looking for 86 cents per share, so you can see just a cent under. Revenues at 23.78 billion. Now, since January, Tesla has cut its prices first in China and then in Europe and the US in an attempt to help demand and fend off some of the rising competition. And for my mind, it's finding the going tough there. Look at the share price chart that we saw last night. This is extended trade, so you haven't yet got this built into the cash share price, but I think definitely we're going to see a drop at the start of the trading day today. Now, Tesla's been cutting its prices to fend off this competition that we're getting. It's not just Renault, it's Ford, it's Toyota, it's BMW, it's Audi, it's all the big car makers moving heavily into this space. Now, not all produce big numbers. I was reading yesterday that Toyota, of the 8 million cars it produces, only 200,000 are electric cars at the moment. Tesla produces 2 million cars, all of which are electric. And it has that first mover advantage to the point. But on the other hand, the other car makers are already tooled up, ready to go for chassis and body work and so forth. And it's just a question of inserting some of the electric technology, which in itself is complicated, but nonetheless, they have this advantage of having market share. And people like to buy more Toyotas, or they like to buy more VWs. If they're a VW person, they'll want to buy an electric vehicle made by that brand. So in the conference call following the release, Elon Musk said it was better to shift a large number of cars at lower margin and harvest that margin in the future as we protect our autonomy. Investors were also taken aback by Tesla's production forecast. Musk had earlier said this year that 2 million vehicle deliveries were achievable, a number he didn't confirm yesterday evening, but instead he stood by the company's official target of 1.8 million deliveries this year. Just want to go back to this chart, bearing in mind where we are, and look at some technical analysis around where the recent lows at $164. 169.64 is where we ended up yesterday's session. But look at where we've come from. The record highs in the stock back in November 2021 at $415. So we are well under half the value of what we had then. Many will tell you that this was a tech valuation. It wasn't an auto manufacturer's valuation. And now we're getting a little bit more in line with other automakers and the cost pressures they are having. But I think the big problem here for Tesla is where it goes in terms of its pricing. It's no longer able to charge the premium pricing because there are a lot of other car makers now with very, very good alternatives to what Tesla is producing. And it'll be interesting to see how things develop over the next few years or so for this sector. Talking tech, let's go into the pure tech play, IBM, posting mixed results late last night. It's an all-session stock. I'll take a look at that in just a minute. Earnings per share coming in higher than expected at $1.36, 9 cents up on forecast, while revenues falling marginally, short of expectations at 14.3 billion. I want to show you the share price moves late yesterday because this is an all-session stock. And in fact, what I'll do is I'll go on to a 1 hour candle so you can see exactly where it produced these figures, initially rising at the release, but quickly cutting into those gains to end the session just, 0.83% on the trading day. We've got the one-day chart showing us closing at 128.35. So we're defending this line of support at 121.72. It seems to me to be far away from breaking the resistance at 13.34. So we're right in the middle of the recent band. Let's take a look at some of the earnings out today now as we look into some of the expectations for these businesses. AT&T, earnings per share 58 cents and revenues of 30.24 billion. That's an all-session stock on the IG platform. American Express out $2.66 earnings per share expected on revenues of 13.98 billion. That too is an all-session stock on the IG platform. And Philip Morris, earnings per share $1.35 on revenues of just over 8 billion. I want to show you the all sessions traded on these two stocks. American Express here has got this rising line of support, and it's already seen some nice big gains in the last week or so ahead of the numbers. And this coincides with the recent release of earnings out from some of the pure banking plays that we've had, which have shown that whilst there has been an uptick in some of the businesses that are associated with higher interest rates. These companies that charge higher interest rates are, as of the most recent data, not seeing too many people defaulting on their ownership of the debt. And yesterday we saw American Express close very close to the close very close to the high point on the candle. So when it reports earnings, it'll be interesting to see how this stock moves, and you'll be able to get an immediate reaction to that when it does produce those figures. Let me just quickly update you as well on what's happening with another all-session stock, and that is AT&T, which trades under the ticker symbol T. But I just want to show you all sessions closing at yesterday's trade last night at 1969. That stock reporting before the bell today, worth watching. All sessions on the IG platform. Let me just go with one other share price chart. I think I've got it listed here. It's Virgin Orbit Holdings. Now, Virgin has had all sorts of problems after its first move up into space that we saw Richard Branson took to the air, and selling seats for future space travel. Now, this company is worth virtually nothing now compared to what it was worth. 6.8 cents per share as of yesterday's close. Now, post-close last night, there was some suggestions, the Washington Post carrying an article that said the company's in talks with potential buyers and planning new launch attempts despite the pending bankruptcy in the business. Chief Executive Dan Hart said bids on the space launch company are due in by May the 14th. Now, post-market last night, this stock jumped 89% to 12 cents a share after trading as low as 6.2 cents earlier in the day. Closing out at 6.8 late last night. Just keep an eye on it. It's one of those stocks that's worth a fraction of its former self, but another stock nonetheless to watch as we continue to monitor what's happening in the space race. Now, let's take a look at what's been happening in other areas of the market. Crude oil inventories last week falling more than forecast, according to the EIA yesterday. Crude oil stocks falling 4.6 million barrels, analysts anticipating a 1.1 million barrel fall. This was due to an increase in refining activity. Refinery utilisation rates rising by 1.7 percentage points to 91%, its highest rate since last December. At this time of the year, we get this switchover between the heating oil and the oils that go into fueling cars. In what was loosely called the driving season, it meant that people, of course, getting out more rather than staying in their homes. It doesn't quite follow these days, but nonetheless, there is this switchover that goes on. So people looking at some of these refining rates and what refiners are coming through with. Let me just show you what's happening with US crude. Trading below $80 a barrel. And in fact, we've got the lowest print we've seen in the price of US crude since the beginning of April, I beg your pardon. So it's the lowest print this month, and we're on the way down, despite the fact we got a drop in crude oil stocks. Staying on the charts, just wanted to end on what's going on with spot gold. Not much move. For anything, there is a sort of consolidation around the 2,000 level, currently trading at 1999.7. We're talking yesterday about this Fibonacci I drew on here. If you think that there's more downside to come, I was talking yesterday to Axel Rudolph, IG's chief technical analyst yesterday. He's a former chairman of the STA, the Society of Technical Analysts, and quite an interesting voice to listen to. And Axel was talking yesterday about his point about the fact that he thinks that the US dollar is due for some strength from where we are. We quite often follow the dollar basket. I don't have a chart on that, but there's an inverse correlation between the dollar basket and what's happening with the price of gold. His view is that we've got strength coming for the dollar, and this could see some more downside for the price of gold. Now, my point was here yesterday that if you're waiting for an opportunity to get back in, if you're not in the market at the moment, I would suggest you look out for potential print closer to this 1897, which is a 61.8% retracement. Certainly as it trades below 2,000, I think there's more potential downside than there is upside. And I think this is confirmed here by this lower part of the chart down here, which is the MACD, pointing to momentum beginning to drain out of this market. That's it. I've got about 5 minutes to go before the start of today's European session. Watch out today for the likes of Smiths, the start of today's trade, and Rio Tinto back at 10:30. We're charting the markets.